Hello, everybody. Welcome to the Invest Answers weekly Q&A. This is where I answer questions from both Patreon members and subscribers to the channel. So this week we had a lot of very interesting questions. And without further ado, I'm going to jump right in. But a quick disclaimer, none of this is investment advice. So the first question is from Jane from Patreon. And she said, it would be cool if you could run some math around NFT projects and what you think of them. So NFTs are non-fungible tokens, and to me, it seems a little bit like the Wild West. It reminds me a little bit of the ICO market during 2017, 2018. I believe it's also an area that could be very easily fraught with fraud, like digital art. How is it real? How do you prevent it from being copied or whatever? But it's kind of crazy. So some of the top sites out there are things like CryptoKitties, where you can breed your own cats. And I understand how during this whole pandemic time, people are looking for different types of activities because they're indoors all the time. So that might be driving a lot of the interest in CryptoKitties, but I think it's kind of weird. Then there's the Russian Rarible site. It's a marketplace for digital collectibles, which is also kind of interesting. But the one I can relate to is art on SuperRare. That's SuperRare, and it's represented by an ERC 721 token. It's secured by cryptography and traceable on the blockchain, which I like. I like the idea of being able to buy something and know there's only one copy of it and you can track it anytime on a publicly disclosed blockchain. So I think that is a great concept, and that's why I believe this whole area has legs. There's another one that's kind of interesting as well. There's the ETH name service, where you can register your name.eth, for example, investanswers.eth, and you can buy it, which is kind of weird. So the short answer to your question is, I like the angle. I believe there will be a few winners. Normally the first movers will win, people that will dominate a complete vertical or market. I also like the fact that there's some smart folks like Shamath and Mark Cuban like the space. If they're bullish on something, it's normally a good idea. But still, a little bit, from my perspective, I live still a little bit in the tangible world. I don't think I'll be breeding any cats anytime soon online. And I prefer tangible art, things that I can feel, touch, and hang on the wall. And then I know it's a true limited edition. So thank you for the question. Yes, there's a space. I haven't figured out how to play it or if I'd even jump in. So second question from the Savage Few. Do you have any thoughts on what the next crypto bear market might look like and what steps one might take to hedge against it? So great question. So a lot of people got really badly hurt during the last crypto bear market because of its brutality and its length. But this upcoming one, if there is one, I see a couple of things happening. Again, this is just my surmising of signs and signals I see out there. I see Bitcoin remaining strong, and I'll talk a bit more about that later in a subsequent question. I see alts ultimately taking a hit, especially since there are thousands of them. Many of them are complete garbage. And also the fact that a lot of people are making 20 to 100x on their money real fast. So that typically results in a quick in, quick out type of situation. These people aren't hodlers in the Bitcoin sense of the word. So I think what they're going to do is, once they realize they got a big stack of cash, they're going to get nervous and they're going to sell. And then they're going to look for a place to put that cash. And I don't think it's going to be the stock market because you already have the crypto bug. So I think they're going to look towards things like Bitcoin and Ethereum. But when they look at Bitcoin at $60,000 a coin or even more, it might be too high. And then the second blue chip player, as I refer to, would be Ethereum. And I think that could get a lot of the money made from the altcoins could flow directly into Ethereum. So not too sure exactly what's going to happen, but in terms of time frame, I'm still looking at October for this to potentially happen. It could be sooner. There could be a stock market sell-off between now and then, which could impact or accelerate the actual crypto bear market if it exists. But I'll talk more about Bitcoin in a minute. So that was a question from the Savage Shoe. Thank you so much. Third question this week is from W2. He says, it's regarding Vince Lanci, regarding Bitcoin. He says the limitations of the float will eventually work to kill price and liquidity. As price increases, interest also increases, but won't there come a point where the lack of float will be a negative towards Bitcoin? And it's a very interesting question. So my thesis since day one, and one of the things that got me really hooked on Bitcoin, is its scarcity. And it's interesting how people are freaking out about, lack of float, etc., lack of mining. A lot of people talk about, oh, what happens when Bitcoin stops issuing new coins in the year 2040? So I think, in my opinion, you have to consider what a pristine asset Bitcoin is, and that 99% will be mined by 2140. But the value at that time could be in the tens of millions of dollars. So a fraction of that could be very valuable. There'll also be things like transaction fees. I also believe with the increased computing power from Moore's Law, mining will still be profitable, even though they'll only be getting a slight sliver of an actual Bitcoin. And the transaction fees actually could be modified over time to increase. So realistically, Bitcoin could be replaced or cease to exist in the next 10, 20, or 30 years, or it may continue to exist for the next 120 years. I don't know. I'm far more concerned with the threat of nuclear war or asteroids hitting the Earth or global warming than I am about the actual scarcity of Bitcoin. Again, net Bitcoin is the hardest money on the planet. It's the best performing asset over the last 10 years. It's a pristine store of value, and I don't see that changing for at least the next 10 years. If the concern you have is around a low float, that doesn't bother me either, because for every buyer, there's a seller. It's only a function of price. And remember, we also have the Satoshi, which is 100 millionth of a Bitcoin. So people will start stacking sats, as they say, buying Satoshis. And that's going to be happening much more. People are going to think in those dimensions because it's already become almost out of reach for many families to buy one whole Bitcoin today at $58,000. So the next question is from Tianming Kong. What are your thoughts regarding BCH? And also BCH has 21 million coins. Is it worth buying and keeping? So for you all out there, BCH is BitcoinCash. BCH is a fork of Bitcoin and sold on some websites as if it is Bitcoin. And from a performance perspective, BitcoinCash is completely stalled. It's up 87% over the last year compared to Bitcoin being up over 500%. So what would you choose? It's a no-brainer. Obviously, it is not Bitcoin. It's not correlated to Bitcoin. In addition, some bad news. OKCoin will suspend trading of BitcoinCash next month. Its CEO cites Craig Wright as being one of the big problems. And Craig Wright is the guy that believes he's Satoshi, but he's just a fraud. And what that has done is it's brought about a malicious info war. And this whole BitcoinCash is tricking people, and I feel really bad about that. Newbies, they're people who aren't familiar with the space. They are desperate to buy Bitcoin. They find the quickest, easiest on-ramp, and they get fooled thinking BCH is BTC, i.e. BitcoinCash is Bitcoin, and it's not. So I'm sad about that. I think over time it'll fizzle out and die, like many of the other altcoins. So my advice would be get out if you can and put your money into real Bitcoin. The second last question today is from John Swartz. With the massive rise in Bitcoin and the fear of rising prices, should I take on debt to buy it now, like some companies do? For example, what Michael Saylor is doing at MicroStrategy. This is an interesting question. I'll give you my perspective. Again, a big part of this channel is all about managing risk. And taking on debt to buy Bitcoin is extremely dangerous. Remember the golden rule, no more than 5% of your investable assets. No more than 5% of your investable assets should be in crypto. However, I broke that rule clearly. A lot of my investable assets are tied to Bitcoin in one way or another. But my cost base is very low, so technically I can take a big hit and it'll still be better off than holding fiat in a checking account. But the key rule, however, is never take a loan to buy Bitcoin. I'm stressing that for the second time, or any risky investment. In fact, don't buy Bitcoin, many people recommend, until you have a large enough savings buffer for emergencies like medical expenses and pay off your high interest debt or credit cards. That's always the most conservative and best fiscal approach. Once that's done, then follow the DCA dollar cost average method with disposable income and just put what you can every week, every 2 weeks, every month into Bitcoin. Trim your expenses and DCA when you can. That should be like a little motto. So you're better off doing that than keeping cash in a checking account. So just remember the goal for 2021 as well. Bitcoin is going to be somewhere between 100,000 and 208,000 by my estimations. So we're nearly 2/3 the way to 100,000 already. So gains from here are maybe 66% more if we go to 100,000 and 330% more if we go to 200,000. So that's kind of where we are today, but it would be risky. There are stories out there as well of people selling their houses to buy Bitcoin. And that's a good idea if you did it at the beginning of 2020. But doing that today, I'm not sure. But it is also a good idea because we are at this generational change and wealth transfer type situation I believe we are in. You know, trim your living expenses and save what you can, because the payoff will be exponential 5 to 10 years into the future. Okay, last question is from JMG. Let me read this carefully. When and how do you decide to reduce exposure to raise cash? The VIX has been range bound around 20 to 22. So what I have done, and this is not advice for anybody else, but just my personal take, I've already sold my stocks that have run and made money. I created a portfolio. I called it the C19 portfolio that I put a bunch of cash into in March 2020. It included things like Uber, Lyft, Jets, etc. Companies that were really beaten down and recovered nicely, but I felt they had reached tops, so I sold them all. Now, for my long positions that I'm still very bullish on over the long term, things like Illumina, Tesla, Square, PayPal, I've sold out of the money calls against those positions. Not all of them, but some of them. And that's how I raise cash and I hedge my bets. I used to, back in the day, sell calls against the QQQs when I had big tech portfolios. But now I like to do it more surgically, of selling calls against my existing long positions, so I can manage them carefully. And if there is a spike up in price, I can do what's called a roll up. If there's a big dip, I can buy them back, wait for another rise in price, and sell them out again. So that's kind of what I've been doing for a long time. Also, we still have the 1.9 trillion coming from the Fed, and the old adage is don't fight the Fed. So when there's a lot of money and liquidity coming into the market, you can expect the market to go up. But there are some indicators that I'm seeing out there that make me very cautious. I highlighted them in my Are We in a Bubble video a few days ago. One of the indicators that I look at beyond the ones I mentioned in that video was when the number of 52-week highs declines at a market top. It's an indicator that there are fewer stocks working to push the market higher, which is a red flag for me. Also, I like to follow the smart money. And there was a very interesting survey that came out from E-Trade where they surveyed their millionaires and asked them, do they think the market is at a bubble? And there was 4 different questions. 9% of those millionaires surveyed think the market is nowhere near a bubble. 9%. 16% believe we're fully in a bubble. 46% believe somewhat in a bubble. And 29% think the market is approaching one. So that's kind of the situation right now. So I think we all need to be very cautious. People that are just FOMOing into the market right now, I can't stress this enough. I'm very concerned for them. Buying at a high, chasing all-time highs is never a good idea. So everybody be careful out there. Keep some dry powder. When I say that, I mean cash on the side. Keep out of very risky positions that have run up. Take your money off the table where you can and accumulate cash and be very cautious. So big thank you, everybody. That blipping noise, sorry about that. That is Discord, part of my Patreon account, and it's blowing up all the time. So sorry for those little dings. Watch for the scammers below. And if you like this content, hit the like, subscribe, etc. Love you all. Thanks again. Bye.